Okay, welcome back to the drawing board of the BPO structure. That is the biggest profit opportunity structure for trading reversal patterns. So remember, we stopped here when we looked at the first of all, we look at the first structure and its confirmation. The rule says that when you identify the correction that makes up to 200 pips of impulsive move, you can take your entry at the return to break its TL in a case of a bearish correction for a bullish trend. And since we are focusing on a bullish trend right now, up to the very present event, that's what we'll be using for continuing this discussion. So this is the last phase of demonstrating how this worked. The rule says that when you take your entry from the break of the TL back into the trend, that is a reversal entry, you can hold your entry for, first of all, the complete correction move, that is from return to the ISL, and then the double of that move to the ISL. So if the ISL to TL is measured at 200 pips, you are going to hold for 400 pips because that will be a double of the correction move. So in the first case here of the structure demonstrated, you could see that this market had a 200 pip move from 306, okay, from 2306 all the way to 2327. So that's over 200 pips, right? And after that, the market made an additional 200 pips move from 2327 all the way to 2353, which exceeded the second 200 pips move, which would have been at 2347. So the market went all the way to an additional of 50 pips. So total of 450 pips move. And this is what you are looking for when you take your entry following this BPO structure. So in this first case, we can see it confirmed, and we are using it to show you that this is something you can watch for to trade consistently profitably. Now, this is the next structure we have identified here. And in this structure, I showed you where the price was as of the end of the previous day. And I also speculated where the price will get to. So from the, again, TL at 2324, all the way, price has to recover the correction move to the ISL at 2341 and then exceed this move by an additional 200 pips move, which means a double of the correction move from ISL to TL. So which means the market has to go from 2341 to 2361, and this had not happened yet when I showed you the demonstration up until the point we stopped at the current expansion. Sorry, we stopped when we saw the current formation of a G3 event. So now from here forward, did this market later complete the move to 2361? Let's look at it, how it happened. Yes, yes, you can see the market later continued the move all the way to 2361. And what happened? It got as high as 2364 to show that it was a complete BPO structure that had been proven. Okay, so the market reached the full determination of the BPO structure that we had traded. And after getting to 2364, because the TL was at where, let's look at that again. TL was where 2324. Do you see that? So 2324 to 2344 is the first 200 pips move, which goes above the 2341 ISL here. Then 2344 to 2364 is what the next 200 pips move, which you can see that the market made that complete 200 pips move when it got to 2364, and that was where it did what? Did the new correction coming down. So this has proven that the BPO structure is something you can watch for and trade consistently profitably. And if this is one thing you are watching for, then you can always make serious gain. Let's look at it. Has the market exceeded this structure? No. The market still respected the ultimate structure set here when it did what? A correction downward. Now we look for the next BPO structure. And in this case, what happened? Let's say there is no new BPO structure, but there was a correction that almost made it to 200 pips. So we are going to use that correction and determine our next entry. Let's look at it. From 2363, the market came down to where? 2345, which was not up to 2343. It was not an impulse move. So what are we expecting? Are we expecting the market to now follow the same rule when we say that the correction should be an impulse that makes 200 piece move? Was this move an impulse or a power move? So this is a question that we'll try to answer when the structure is complete. So right now the structure is still playing out and we have not marked it yet. So what are we going to be trading in this case? We are going to be trading uh, what formed here, which is an SBL structure, and that is a buy SBL structure. So when we have a buy SBL structure like this, remember that this is another entry rule we are trading. So right now, let's concentrate on what has brought us to this point. Trading the BPO structure requires simple observation and finding your entry from the TL. So, and a TL is formed when there was an impulse, a correction impulse, or a trend impulse. Then the BPO structure is based on correction impulse, where you expect that the market will return back into trend. So that reversal move. So the BPO structure means you are trading a reversal pattern back into trend. And you can see how we carefully plotted this all the way. You can see the high rising of our this was the last projection we did. And I'm going to explain how we use this projection to correspond with the BPO structure. This was the last SBL by SBL level we marked. We use a Fibonacci channel tool to mark the SBL. That's full cycle of the SBL. So what does that mean for? That means that we are doing a projection using the SBL full circle, which is a 100 pips full circle. Okay, so we'll mark the SBL level first of all, and then mark its 100 pips level. We project it, and then the market comes to confirm it. Now look at in this case here, the market did first of all go to the full structure. Okay, went to the full circle move of this SBL. This is how the structure played out, that the market is always playing into structure. And then what did it do? We say when the market reaches the full circle, it has a tendency of breaking it by 10 pips, and that gives an opportunity to take an entry of a correction, or in this case a rejection of the full circle move, because that's an invisible level. We discussed that in one of our previous tutorials. An invisible level, even if you did not mark it. Now we have used this projection, this arrow line, to do that projection of a 100 pips move from where it stops, and that is at 2347.10. Okay, and now we have the full move of price going 2348. You see, so that's about 10 pips move all the way from the full circle move. And what did the market do afterwards? It rejected that level. Okay, you could have had this entry and taken the rejection all the way down, and the market did another full move downward up to 90 pips, okay, before recovering back upward. So why that was happening, remember that the SBL level traded was 2337, and that SBL level is the very last level you are going to use to determine whether the trend is bullish or not. If this level is broken, then the trend has changed. Every other level here is dependent on this level that had its full circle move. And then it is above this full circle move, you start looking for the next level. Okay, so now let's look at it from 2347. Which new level has formed from 2347? Having the market made the full circle move for the BPO structure again. Remember, the full circle move for the BPO structure ranges from 2361 to 2364, because 2364 calculates, if you calculate it, it gives you complete additional 200 pips from the above the ISL of the previous correction R3 events. Now, the full circle move here, even why not marking it, we have seen that there was an impulse. Okay, there was an impulse that was corrected. Now this impulse was corrected full circle. If you look at it, this impulse was corrected full circle. And then what do we have in structured trading? We say when the ISL of this G3 event is broken by 30 pips and the candle opens below it by 30 pips, it indicates that the market intends to change direction. Okay, so what did the market do the first time? From 2352.85, the market is expected to break at 2349.85. So let's see, 2349.85. This is what the market did first. It rejected the, you see, it rejected the deviation limit from the trend. In this case, now deviation limit from the trend based on the ISL of the trend G3 impulse. So if the market intends to go down, it has to break that deviation limit from the trend, because all of these limits are invisible levels, and the market rejected it. And what did it do? It bounced up. Bouncing up, it went to create a new sell SBL. Now, this becomes the next thing to observe. A new sell SBL means that the market has two things to do, which the market has to sell first. Okay, then if the market is going to buy, it has to break also the deviation limit of this sell SBL. So if the sell SBL is at 2354.61, its deviation limit will have to be at 2357.61. So let's look at that. 2357.61. The market did not get there. It rejected it and came down. Okay, so this was a sell that happened and there was no buy opportunity yet. Coming downward, what did the market do? It came to retest a previous, remember that last string break entry level we talked about? Okay, let's look back again and see. So you can follow that. Look at this last string break entry level that formed here. We say this was the ultimate string break entry level 2337, and its full circle move was 2347. Okay, then having done that, the market came back and formed a new string break entry level at 2339 and 2339, a new string break entry level. So with that formed, we look back into the future to see the next level that we are formed here. The market formed, first of all, do we see a new string break entry level here? Okay, so this is coming from the past. This 4-6 string break entry level was coming from the past. Or not really from the past, it's from this very present string break entry level here. Okay, the market formed this string break entry level. If we have come there already, then having formed this string break entry level, what are we looking at? We expect now this to have its own deviation limit also. And then if this is a buy string break entry level, if the market breaks its deviation limit, then we now know that the market is ready to make a downward move. And what is the deviation limit here? 2343.06. 2343.06. So this is where the market makes an attempt at breaking it. 2343.06. This is the candle that breaks. But what happened? The market comes to retest the previous level. You remember? The previous level. So if this would have been a break, there is a previous level that has not been broken, which is the 2339.75 and 11. So these two levels